Okay, so yes, as as you mentioned, I am Ryan Mincy. I am the subject matter expert for credit repair and for SBA loans for the Cleveland Score chapter. I've been in banking for 10 years, and 6 years of that has been in the SBA realm. So I've done loan packaging, closing, and I've also done small business administration, credit underwriting, and financial analysis. So I've been on the credit side of things. I've been on, the packaging and closing side of things. So I just know SBA inside and out, and I know credit as well from personal experience. So today's webinar is about credit repair and why you need it and how to repair your credit. There will be a time for some questions at the end. I'm pretty thorough in our in our presentation here, so feel free to jot down a question or put a question into chat whenever you think of it, and we'll come back to them at the end of the presentation. So from personal experience, credit is not something that you think about until you need to think about it. And then when you do, you might realize that it's something you should have been paying a bit more attention to. I know that from personal experience. As a little backstory about me, I grew up with a single mom. She worked two jobs for most of my childhood, and we were below the poverty line for my entire childhood. She couldn't teach me anything that she didn't know about credit and how important it was. And I learned firsthand when I went to college. I couldn't, I went to college and took out a loan I couldn't afford to take out, and went to a college I couldn't afford to go to. And that loan took me a decade to pay off, and I didn't even get a degree from it. After that, I personally struggled to repair my credit from taking out that loan and not being able to pay it back, over that time. So what we're going to do today is going to go over some tips and tricks to give you some information on how to improve your credit score, both your business and personal credit score, so that you can be in the best position to be a successful entrepreneur. So credit repair is just that. It's fixing your bad credit. Usually the ultimate goal of buying a house, buying a car, or possibly getting a small business loan to start or expand your business. Many prospective and existing business owners don't realize that banks often rely on your personal credit and a personal guarantee in order to make a decision on whether to give your business a loan and extend credit to your business as well. The main path to improving your credit is all about paying down and managing your debt. There are different methods to doing this that we'll talk about in a later slide in the presentation. And the other path to improving and repairing your credit is also making sure your credit report has the correct information. You could be getting negatively impacted by a debt that's not yours, that's in collection, or being hit multiple times for the same debt. It's essential that you challenge and dispute any kind of errors you have on your credit report. So why is credit repair necessary? What's the impact of having bad credit, and why do you need to improve it? First of all, your credit score isn't just a bunch of numbers. There are a lot of consequences to your credit score, and it can have various aspects and can affect various aspects of your financial and personal life. As I mentioned earlier, I have been there before. Oftentimes, individuals with bad credit often face challenges when applying for loans because lenders would view them as higher risk, which means they may either be denied outright or struggle to find a bank that's willing to lend to them. They may have to look to higher risk institutions or banks or lenders, which are lenders that often charge exorbitant fees and interest rates, making it harder to escape the cycle of debt that you're in. If your credit's not good, securing a credit card can be difficult. Many traditional banks will deny applications, forcing you to look at secured credit cards, essentially requiring upfront cash deposits. While these are actually a great tool for building credit, which we'll touch on later on, they're not ideal for a business. Individuals may get approved for loans or credit that at much higher interest rates, leading to more expensive payments over time. This can significantly impact long-term financial health. For example, a $200,000 loan with a 6% interest rate over 10 years has around $66,450 in interest charges. That same loan One moment. Getting a grocery delivery I wasn't expecting until 1 o'clock. That same loan at 9% interest has around $104,000 in interest. That's almost $38,000 in additional charges over the life of that loan. Another unexpected area impacted by bad credit that not many people think of is insurance premiums. Many times insurers consider credit scores when determining rates for auto and home insurance, which can result in paying more for your coverage for those services as well. Finally, if you're looking for work outside of your business, a surprising influence of credit can be found in employment opportunities. Certain employers check credit reports during your hiring process, particularly for positions that involve some kind of financial or fiduciary responsibility. A poor credit history can be detrimental to job prospects. So our next slide is, kind of what is a credit score? I know a lot of people are familiar with it, but we'll just kind of touch base on it. So what a credit score is and its significance, credit scores are primarily determined by different algorithms and mathematical representations of systems like FICO, and they assign a numerical value representing your credit worthiness, which is crucial for financial providers when evaluating a loan application. It's important to note that a Federal Trade Commission study revealed that 1 in 5 consumers may actually have errors in their credit reports. To ensure the accuracy of your credit history, you can get free copies of your credit reports every 12 months from annualcreditreport.com. Regularly checking for errors can help you maintain a healthy credit score and better financial opportunities. How is your score calculated? So in this slide, you can see where there's a breakdown of the components that contribute to the calculation of your credit score. The largest factor by far is the history of debt repayment, which accounts for 35% of your credit score. This includes on-time payments, any kind of collections, bankruptcies, and foreclosures, which is emphasizes the importance of having a strong payment history. Next, we have the ability to repay current debts and manage additional ones, which is around 30%, with a focus on current balances. Additionally, credit age makes up 15%, indicating the duration of one's credit history and how long you've had credit. We also consider the credit mix, which accounts for 10% of your credit score, which highlights the importance of having a variety of different types of credit. So installment loans, revolving debt, and finally, credit inquiries make up 10%, and that just kind of shows that getting multiple credit applications in a short period of time can impact your credit score significantly in that 10% range. Understanding all those different types of or all the different ways and things that go into calculating your credit score will help you manage your credit more effectively. So what impacts your credit score? We kind of said how it was calculated, but what actually affects it and impacts it. So key factors that can significantly impact your credit score. Again, the biggest thing is the payment history. Late payments can negatively impact your credit score, as the payment history of your credit accounts for a substantial portion of your credit evaluation. Next is excessive credit utilization, or using a large percentage of your available credit, can be a signal of financial distress to a lender that's looking at your credit file. Additionally, having a short credit history kind of limits your score's potential, as it doesn't provide enough data for lenders to assess your reliability in making payments. Moreover, relying on only one type of credit, such as just credit cards, can prevent you from demonstrating your ability to manage different types of credit and different types of debt. Finally, making too many new credit applications with a short time frame can lower your score due to hard inquiries, as it may appear that you're taking on too much debt too quickly. Kind of understanding these factors can help you manage and improve your credit score significantly. So how is credit repaired? We're discussing the process of repairing credit overall in this presentation. Legally, it's essential that your credit reports are 100% accurate, entirely fair, fully substantiated, which means that if you spot errors, you have the legal right to address them. You can start by contacting the credit bureau to file a formal dispute, which requires you to provide a detailed explanation of the error, along with supporting documentation. Keep in mind that each dispute must be filed separately, which can make this process potentially lengthy. Alternatively, you have the option to hire a credit repair company, which will handle most of the work for you, but you'll still need to provide the necessary documentation. Basically, the first step in repairing your credit is ensuring that your credit report accurately reflects your true financial history. So, how to consolidate credit card debt? There's different strategies to consolidate credit card debt effectively, as that's the most typical type of debt that is affecting credit scores. First, partnering with a nonprofit credit counseling organization can provide valuable guidance and potential repayment plans. An alternative is to apply for a personal loan, which typically offers lower interest rates compared to credit cards. Balance transfer credit cards can also be a useful tool, allowing you to shift high interest debt to a card with a lower introductory rate, sometimes as low as 0% for a period of time. Additionally, seeking assistance from friends or family can ease your financial burden as well. For those with equity in their vehicles or their home, options like a cash out auto refinance or home equity loan can provide necessary funds at a lower interest rate than credit cards typically are as well. Lastly, a retirement account loan may be available, though it's essential to weigh the long-term implications for that kind of loans carefully. Each option carries different benefits and risks, so consider your own personal individual financial situation before you proceed to kind of make any kind of plan to pay off your credit card debt. Sometimes these options just don't work, and you kind of need to strategize how to pay off your credit card debt and other debts as well. So that's our next slide here. We're going to go over some debt payoff strategies. So debt payoff strategies such as the avalanche and snowball methods differ primarily in their approach to prioritizing debts. The avalanche method focuses on paying off debts with higher interest rates first, and then that saves you money on interest over time. In contrast, the snowball method emphasizes paying off the smallest debts first to build momentum and motivation, even if you might incur more interest overall over the life of the debt that you're paying off. While the avalanche method is typically more cost effective in the long run, the snowball method may provide the psychological benefits by delivering quicker wins with paying off your debt. Both strategies emphasize that consistent payments require discipline, but the choice between them often depends on individual preferences for motivation versus financial efficiency. And then lastly, there is an option for payoff for deletion. Sometimes if you have a collection account on your credit report, if you reach out to the collection agency, oftentimes they will be willing to work with you to cancel or delete the collection account off of your credit report if you pay it off. It's important to get that in writing so that if there is still any kind of dispute on your credit report, you can send that directly to the credit bureau agency itself to have that removed off your credit report. And also you can request a settled debt if the negative impact is deleted as well. So how to improve your score. So now we have some strategies to get our debt in line, which already will improve your score as well. Let's discuss some effective strategies to improve your credit score beyond just the debt repayment. First, it's crucial to keep your balance low, ideally under 30% of your available credit. This is more for revolving debt. Next, apply for new credit cards strategically. Consider options like a secured credit card or loans and balance transfers to lower interest rates, but avoid applying for credit if your score is already low currently. You want to try to work on and establish your credit a bit more before applying for credit cards that you may get denied for that will still negatively impact your credit with a hard inquiry. Additionally, keeping accounts open can help build your credit history positively. So make sure that if you do get a card open and you have had a card open for a while, that you don't close that card out. Keep it active, even if it's just a matter of using it at least once every couple months to make sure that you have a balance and pay it off and keep it open. Lastly, prioritize good security practices by regularly updating software security patches like your antivirus software, and you can also employ a VPN for safer online transactions. These steps will not only contribute to a better credit score, but also to your overall financial health, so you won't have your identity stolen or anything like that as well if you practice good safety security measures. And finally, when it comes to building to maintaining good credit over time, having a solid budget is very crucial. I personally recommend using the 50, 20, 30 rule. Allocate 50% of your income to fixed expenses like your rent and utilities, 20% to debt repayment or savings, and 30% for your variable spending, which includes your discretionary purchases. Going out to eat, going to concerts or events, going to the movies, that kind of thing. It's also imperative to pay your bills on time, as late payments can significantly impact your credit score. Lastly, consider signing up for credit monitoring services such as Credit Karma. I personally use Credit Karma. Their score model does not match up a lot of times with blender score models, so you do have to keep that into consideration. But they do give you pretty spot-on alerts whenever things happen and credit cards get open and things like that in your name. So they not only help identify potential identity theft incidents, but they can also send you instant alerts, keeping you informed and proactive in protecting your credit health. And most importantly, things to remember about credit repair is that, first of all, remember that repairing credit is not an instant process. Negative items can linger on your credit report for up to 7 years. And sometimes that clock can be restarted very easily. So patience is essential to have that credit repaired. Don't expect to see results overnight, and don't get discouraged if you're not getting things happening happening quickly. Patience is essential whenever you're repairing your credit. It's a gradual journey. Additionally, make sure you're taking the time to evaluate your spending and saving habits. Kind of understanding the patterns that you have with money can help you make better financial decisions in the future, because you're learning from your past. Lastly, make sure you are educated as your rights as a consumer, knowing what you are legally entitled to do and legally entitled to have on your credit report and have credit reporting agencies do can empower you in your credit repair journey. So that is the end of my slides, and we are open to questions now. Let me take a look here. I see there was some chat going over here. So Tira, you asked a question about how do you check your credit score quarterly with the three credit agencies. Credit Karma, I mentioned that once before already. Credit Karma allows you to check your credit for TransUnion and Equifax. And then you can sign up for Experian through, I have to look up the web address really quickly. But they allow you to set up their own separate login for that, and you can check it actually, daily, actually. So you can actually check all three of those anytime you want to. So Experian is freecreditscore.com. So that allows you to check all three of your credit scores as often as you need to. Roman, you asked about, will we talk about hard inquiry removal? So hard inquiries, they are now, I believe, batched. So if you have like car shopping, especially, if you're shopping for a car or you're looking to make a purchase like a home or something, you're looking for decent interest rates. If you have many inquiries in a short period of time, then the credit agencies actually kind of batch those together so they don't affect your credit score as much. But otherwise, hard inquiries are removed automatically after 2 years. Next question, it looks like Ben asked about what do lenders consider enough credit history? So it kind of varies by the person. Um, Credit history, they want around 7 years of credit history, showing that you have effectively managed your debt. So that's what the slide I showed about how they look at and calculate your credit score. They want to see you having credit over 7 years. But even if you don't have it that long, I think my personal credit right now, I think my first credit card was about 6 years ago now. Um, and it still counts as long as you're not opening up new cards constantly. Your credit age still stays pretty high. Um, so the next question I see here is from Maria. Should I trust the settlement and payments that the collection company offers? So that is a hard question to answer. Because oftentimes they have purchased the debt for a very small amount. You can always try to negotiate with them to see if you see if you can't pay the settle the debt for less money. And um, I would always try to again try to get that pay for deletion method used. A lot of times they won't. But you can still at least try to offer to settle the debt if they were to delete the collection account off of your credit report. Because the sooner that collection account falls off, the better. Even if it stays on there and it shows paid in full, it's still a collection account on your credit report. So I always recommend trying to get them to um, agree to delete the account off your credit report if you pay it off. How do I get a negative account removed from my profile? So Shabrika, I'm not exactly sure what kind of negative account you're talking about. If it's something that's not yours, you can dispute it and tell the collection or tell the credit bureau agency that it's not your debt. And it goes back to the extender of the credit. There's an investigation, and they have to prove that you owe the debt in order to have it removed or to have it stay on the credit report. So it's important to do those kind of things. You can do it yourself. You can in Credit Karma itself or in the freecreditscore.com for Experian. I've done it through both. You can dispute charges right through those programs, and it goes back to the reporting agency to have it removed and investigated. So next question. Do you recommend to close some cards if you have not used them for a long time? So that goes back to to the credit history. If it's a card that's open that does not have an annual fee, I do not recommend closing them because the more cards you have in that mix uh, affects your credit in two different ways. It shows that you have more available credit that you're not using, so your credit availability and your utilization rate is lower. So you get the benefit of having that part of your credit score improved, and then also the credit history and credit age is also a big factor as well. Let me scroll down a little bit through here. So I read that if you have a new baby, you should add the baby's name as a user on your credit card. When the child is 20 years old, they will have a 20-year credit score, and their credit score should be around 700. So I actually speak to some middle schoolers on career day and talk about my career in finance, and I do a little financial wellness presentation for them as well. I actually bring this up. Again, I grew up as a child with my mom, with my parent in poverty under the poverty line. So she didn't have any credit cards to add me on to. So it's not, something that everybody can take advantage of. But yes, you can add a minor person as an authorized user on your credit cards, and that can establish credit for them if you are making on-time payments and everything. It's also a double-edged sword though. So if you have a change in circumstances and you're not able to make on-time payments, or if you close credit cards, then same thing. It can affect their credit history in the same way that it affects yours. Scrolling down, but yes, that is accurate, Jeff, and thank you for asking that question. Um, let's see. What credit card offers unlimited lines of credit? I have never heard of a credit card that offers an unlimited line of credit. Most of them still have a credit limit of some type. And for how many years? I mean, you can ask for increases to your credit card limit with different card vendors, probably every 6 months or so, I believe. That's what I've seen in my own personal experience, at least. But most likely, again, it goes as a hard inquiry sometimes, so you may not want to if it's going to affect your credit and impact it negatively. So that's kind of something you have to balance. So how accurate, creditable is the credit score that's stated in the dashboard of a commercial credit card or your bank account? So Tiara, that's a really good question. It depends on what financial model they're using. Oftentimes, you'll see a lot of those dashboards use the Vantage Score 3.0 model, and that is not the same model that banks use for lending. So they typically use the FICO 8 model, or they do have different FICO models for home purchases and auto purchases as well. So they'll get you close, or at least in the realm of possibility with those dashboards. Same thing with Credit Karma. They use the Vantage Score 3.0 model. So it gets you at least in the general ballpark, but they're not completely accurate. Is your business credit separate from your personal credit? Personally, you may have a low credit score personally. So business credit and personal credit are separate. The problem is oftentimes to get your business credit established, you have to rely on your personal credit. So, especially in the SBA world, that's typically why a lot of banks uh, steer people towards SBA loans, is because the SBA lending system really kind of helps people that may not normally get credit for their business get a loan for their business. And personal credit scores are actually typically a large reason why they get steered towards the SBA loan program. Uh, Personally, from personal experience, whenever I was underwriting, if there was a credit score, probably below 650, that oftentimes went to the SBA lending program. So your personal credit does affect your business. It's important to understand that. Let's see. So next was how often or when credit activity is checked. It seems sometimes it's checked multiple times, might exceed 30% for a large purchase and turn around and pay it back down before closing it, but end up getting a negative hit anyways. Um, so I'm not entirely sure what that question. It seems like there's multiple things in that question. So you should only be getting an inquiry on your credit report whenever you are allowing it. So if you're not authorizing a company to check your credit, you should not be getting a hard inquiry. And if you are, then you need to dispute that hard inquiry because you did not authorize it. Whenever you are It's important also, I think the other part of your question here is you are using 30% more, over 30% of your credit for a large purchase and then turning around and pay it back down. So it's important to know that your credit card companies only report to the credit reporting agencies whenever you get a bill produced. So if you are having a balance on your credit card and you pay it off, you won't see that paying off of your debt reflected until that next bill cycles through. So although you can check your credit every single day on Credit Karma, you may not see any updates until the bill cycles for the next month. Irvin asked, how do I contact you after this program? I actually have my email address here on my Zoom panel, but it's ryan.mincy@scorevolunteer.org. And I'm sure that we can get that sent out along with the slides of the program and a copy of the recording. That will all get sent out to everybody that registered. So that is something that you'll automatically get. Let's see. 455 times 3 payments is a good way to pay for a 5 point. I'm not exactly sure, Maria, if you can clarify that question a little bit. Because I'm not sure exactly how that adds up. Or, yeah, I'm not exactly sure about that. If Experian and TransUnion have different information, can it be disputed? So yes, that's one of the things I mentioned with having making sure your credit reports are accurate. All 3 credit reports should be more or less the same. So if there's an account on one that's not on the other, then make sure that you're checking and verifying that account is yours, because sometimes it may have been attached to you incorrectly. Just as a personal anecdote, I had a collections account on my account show up on one of my credit reports earlier last year for First Energy company, electric company, that tried saying that I had a $600 debt that I hadn't paid off, and it was actually the person that moved into the house after me that had the same first name and actually had a fairly similar last name. So I had to go through and dispute that with the electric company and the credit bureau to have that removed off of my collections account. Let's see here. What if a secured credit card has an annual fee? So I I don't like annual fees in credit cards. So if I personally started off with a secured credit card through Capital One. I made sure there was no annual fee. And then after a year of making on-time payments, they actually increased my credit limit and applied that security deposit towards my balance, which I didn't have anything on it at the time. So it's I always try looking for a credit card without an annual fee, because it's not something you want to have to try to think about or worry about. I did have a card with an annual fee once and wasn't using it and forgot that they charged an annual fee, and I almost had a late payment posted on my credit bureau report because I forgot about it. I ended up paying it off, before they reported it as late, because there is a small grace period typically built into credit card bills, but it's definitely not fun to do and try to keep track of. Can you have aliases and old addresses removed from your credit report? So if you've used an alias, or if you have an old address that is correct on your credit report, uh, no, and you should not have them removed, because that is part of who you are, and you want to make sure that your report actively reflects where you've lived, and what aliases you may have used in the past, because again, employers might be looking at that, and a lot goes into lending that a lot of people don't understand or realize. So with especially with financial analysis, background checks, and personal record searches happen, and it's important to make sure that all that information on your credit report is correct, so that lenders don't question the information in a background check or a public record search. Shabrika asked, are there programs that work with bad credit in helping fund a business? So again, the SBA 7A loan program and the SBA Express loan program, they help people that they're designed to help people that would not normally qualify for a loan achieve financing for their business. So I would look for for banks that offer SBA products. If you are trying to fund, start a business or fund an expansion for your business, whatever the process, whatever you're trying to do for your business. If a creditor contacts someone they're not familiar with them and can they require more information about the debt? If they can't, if they don't produce it, can they request it removed from their credit board? So yes, if you dispute a transaction or dispute a credit on your credit report, they go back to the person or to the agency or lender that says that they have given you credit. If they cannot produce documentation that states that that you owe them money, which is typically a promissory note or something of that nature, then that they have to remove it because they cannot prove that you owe the debt. If you're looking to remove hard inquiries, where should I start? Again, that's not necessarily possible unless it's a hard inquiry that was not authorized. If you authorize the hard inquiry, you really typically cannot have them removed. They fall off automatically after 2 years. Let's see. They want me to pay $455 a month for 3 months for a debt of $5,550. If that is a collection agency, that typically means that they have probably purchased that debt for way less than that 5,550, and they're offering to settle that debt for sounds like about $1,500. So if you want that to be considered, paid and settled on your credit report, which is positive, then yes. Again, I always recommend anytime that you get um, anytime that you get something from a collection agency, you get it in writing, so that way, if they do not update your credit report to reflect it, you can dispute that transaction and send it in to the credit reporting agency so they can fix their records. Should we go SBA 7A and the XBA Express program? It's those two programs. It really depends on what the amount of the loan you're seeking is. If you're looking for a loan under 500,000, you're going to be looking at the SBA Express program. If you're looking for a loan more than 500,000, you're going to be looking at the SBA 7A program. Next question. What would you suggest to me? I need to raise my credit score to a minimum of $700 by June, or a minimum of 700 by June, to establish high business credit and take out a business loan and get 0% financing in new business equipment. I really don't have any recommendations to raise your credit score quickly because, again, as I mentioned in one of the slides, it is a long process. It's not something that happens quickly, typically. If you have decent credit, some ways you can establish or start building credit, somewhat quickly, is by starting to build credit history with a secured credit card. There are also some credit builder loans, is what they're called. They're not really loans, but they're reported on your credit report as a loan. So that shows you have revolving debt and installment debt. And how those typically work is that they'll tell you to send $100 every month, or it can vary depending on what you want your end goal to be. But you send them $100 a month for a period, for however many months that you have set up with them. At the end of that time, they send you back what you sent them, minus whatever fees and interest that you've agreed to with them. So you might send $100 for 6 months, and they might send you $525 back and keep $75 for their fees. So that's something you can look at as well. That's, again, called a credit builder loan. There's a few companies that offer those that can help you establish different types of credit that you may not have currently. How long does the credit bureau have to prove that the debt is real? So it's not actually the credit bureau that has to prove it's real. It's the creditors that are reporting that the credit is out there. that you've taken credit from them or they've extended credit to you, that I think it's 60 days, I want to say. I have not had to dispute one for a while, so I do apologize. I don't have that exact number. But they do have a period of time that they have to prove that that's real before the credit bureau agency just removes it off the credit report. Um, Paid and settled better than having it deleted. So having it deleted is better because then it's just not on your credit report at all anymore. Having it paid and settled uh, is still good. It will still improve your credit score a little bit, but your credit report will still have the credit account or the collection account on it until it falls off after 7 years. So that's probably um, the best way to do it is having it deleted. Um, let's see. What can work for my timeline? I think that was about the 700 credit score by June. Again, the only thing I can mention um, the only thing I can mention is trying to have different types of credit that you have that you're managing well, and just trying to establish that credit history. If you don't have credit history already, that's going to be likely be the limiting factor in you getting your credit score that high in that short of time frame. Let's see. Is there any kind of forgiveness for extraordinary circumstances that lowers your credit, like an illness? So you can also add remarks onto your credit report. So you can potentially, again, through like Credit Karma or through the freecreditscore.com, TransUnion and Equifax also do have their own websites, I think, for that you can go to them separately for credit score signups like Credit Karma and like freecreditscore.com. You can add remarks to your credit report. Um, Oftentimes, from a lender's perspective, um, they can look at it and they can get an explanation of your credit. So oftentimes, if I'm looking at whenever I was underwriting, if I was looking at a credit application and I saw a sudden change in spending habits or a sudden drop in the credit score over time, we would get an explanation letter, and oftentimes that's enough for a lender to to work past what they might be looking at as limitation or a risk in lending to you. Um, so Maria asking further questions about the debt to have it deleted. Um, I would, again, there's a letter. You can probably look up a form template online that you can fill out and kind of send that letter to them at the collection agency, and get them to agree to delete the debt for a specific amount of money. And if they reply positively, then make sure you keep that documentation. And then yes, you would want to send in a check or pay through their portal, however they want you to pay for it. If old debt is on the report past 7 years, how do you get it removed? So there's a couple of things that can impact debt staying in your report for more than 7 years. Oftentimes, if you maybe dispute debt that you think is inaccurate and it's comes back that you do owe it, that 7 year clock starts again from the time the debt was confirmed. So it may be that you haven't, that debt was owed from 10 years ago, but um, because you confirmed the debt 5 years ago, it's still going to be on your credit report for 2 more years. So if the debt's not accurate, then you want to make sure you dispute it and have it removed off of your credit report. But it should not be on there after 7 years. Let's see. I have a credit card with Bank of America and have been making monthly payments, but unable to meet the minimum payment amount. Despite my consistent efforts, the balance continues to grow to fees and interest. So the only thing I am, so it's hard whenever you're unable to make the minimum payments on a credit card. because they do charge late fees or fees that because you haven't paid off the balance. That's the minimum balance, and they do also you also do incur more interest charges that way too. Um, if you're unable to make the minimum payment on a credit card, um, the biggest option I have would be to try to get that credit card paid off with a consolidation loan. Um, I know that you mentioned that you're not able to consolidate they've already kind of told you that they're unwilling to work with you unless you consolidate. That's kind of a very hard situation. Um, I know oftentimes that they do allow forbearances and things like that. So that might be something you might want to ask about. That's typically done on car loans and housing loans, but it may be available based on the bank for credit cards as well. Do you suggest I close secured credit cards and get the money back? So I never suggest closing out a card unless it is one that's not your oldest card. So if you have a card that's older than that and you want to get the money back for a secured credit card, you can. Oftentimes they have that security deposit tied to um, making good payments, and they actually send it back to you anyways. So that might be something you want to look into to see what circumstances you can get that security deposit back without having to close the card is what I would recommend. I think, okay, let me see here. I see some more stuff in the Q&A section here. I think we've covered some of them. Yes, you'll get a copy of the recording. I'll mark that as answered. Um, we've already talked about how to remove a negative account. I'll mark that one as answered. How can we send dispute letters? So you can actually dispute right in the credit report itself oftentimes now. If you cannot for some reason, typically if you click on to dispute, you can get an address and things like that to send dispute letters to the different creditors that are stating that you have a um, they're stating that you have a negative account. Um, how do you repair or enhance business credit? So business credit is actually very similar to personal credit. It's all about kind of managing, um, your cash flow and making sure you're not, taking out more than you can pay back, and disputing stuff that's not accurate. It's very, very similar. Uh, so is this being recorded and are slides available? It is being recorded and slides will be sent out as well. Sorry that you weren't able to get on the first part. What if a secured credit card has an annual fee? I think we talked about that in the other chats. I think let's see, there's a couple of questions about that. What's the best and safest way to clean your credit? Covered that quite a bit, I think. But it's really just about you know paying off the debt that you do have in the best way that works for you. Again, the snowball or avalanche method are the two that I personally have used in the past, and I'm actually still using the snowball method. Whenever I bought my house, I was leaving a relationship and everything, and ended up having to buy some furniture and stuff like that on a credit card, and I've just been slowly paying it off and trying to be a bit more aggressive with that now that I've gotten to a better employment situation. So it's really just kind of about paying off your debt the best you can, keeping cards open, and getting any kind of errors off of your credit report. Let me mark those as done. So all the Q&A section is done. Let me check back into the chat here. I personally do not have a template for a dispute letter, Irvin, but if you want to just Google that, um, that that there should be tons of templates and stuff like that for dispute letters or pay for delete letters on Google. Um, what should we do if the dispute was denied? So the dispute should always be done through the credit bureau reporting agency, and then they will reach out to the creditors typically to have to ensure the accuracy of the information. 10 out of 13 accounts are negative. So bankruptcy is always a very personal choice. I personally have been able to avoid filing bankruptcy, but I know that it is an option that some people have to take advantage of. So while I cannot personally recommend or not recommend bankruptcy, it's important to look at your own personal financial situation and possibly talk to an attorney too to see if it would ultimately be beneficial for you to file bankruptcy. Because a lot of times there's assets involved, and banks and lenders can possibly take assets. So it's important to talk to a lawyer to see how that would personally affect you. Is it good to have 8 to 10 credit cards? I mean, realistically, the amount of credit cards shouldn't matter too much. It's really more about how you're using them and what your utilization rate is. Just want to make sure you keep under that 30% utilization rate to keep your credit score, to keep the credit score and the impact of your credit score as high as possible. And I think that is everything answered here. So we'll kick it back off. I'll stop sharing here. Oh, there we go.
Thank you, Ryan, very much for a very comprehensive and detailed review of credit repair. As Ryan has mentioned several times, everyone who attended this webinar, even if you got on late, will receive a link to the recording and a copy of the slides. With that, I'm going to wish everyone a good day and end the webinar.
Yep. Thanks,
Thank
everybody.
you, Ray.